Yeah, I have until 4:30, so I don't know how much time would. I don't know what time this is. This is like 3:30, 3:20,
Mm.
3:17. Okay. So yeah, if should I start?
Yeah.
Absolutely. Yes.
Okay. All right. Thank you very much. My name is Finzi Mwezani from Bank of Zambia. I'm a Penta 97. Clement Oye. I'm going to do the presentation. Well, I was a commoner, by the way. Never prefect, not even a wing monitor. Proper wounded. Because I was properly wounded. Yeah. So I think my presentation is on government securities. So these are bonds and treasury bills. So I think those that attended the other week's presentation, this was the outline. So we use the same presentation. So this would be my outline. Like first we'll define what these instruments are and just try to differentiate between the two kinds. And then I'll go on to discuss how the securities are issued, the amounts that one can purchase in terms of the minimum and the maximum. And also then I'll move on to eligibility, as in who is eligible to participate and what forms or what requirements there are to register. Then I'll move on how you can go about to participate in these instruments, and then I'll give you examples of how we can compute these two kinds of instruments, and which it just enhances the difference between the two. And then I also give an example of some of the reports that we publish in terms of, just to make you understand, when you go on the Bank of Zambia website, when you see these reports, what are they talking to and what they mean. And then I think after that, most importantly, will be the questions and answers.
Wow.
Yes. Yeah.
You preempted my questions. I have a list of all these questions.
Yeah, I hope to answer them before you ask.
Wow. Okay.
Yeah. So like what are government securities? So like these are debt instruments that the Republic of Zambia uses to borrow funds from the general public to finance its operations. As we may know, the sources of revenue for government is tax, most importantly, tax revenue, and also any any revenue that is earned from the various businesses that government holds. But as we may know that government is not in the business of doing business. I think government is mostly in the business of providing that environment to enable the economic growth, to enable the various sectors of the economy flourish. So in so doing, they are mostly spending. So the fact that tax revenue is not enough to cover the various government operations, there's need for government to source other avenues. So this is one avenue in which the government uses to borrow from the public. So the government is obliged to pay the holder of these instruments at maturity. So this is, I think, enshrined in our constitution, that the time that these payments are due, they are made to the various holders. So if you have a payment that is due today, by 8:15, when the financial markets open, you have to get your payments. Obviously, there will be a minute or two delay because of it's a process that it has to hit the bank, and then the bank transfers to some banks. Might take longer. It might take the afternoon, but ideally it's supposed to hit your account by 8:15. So what are the differences between bonds and treasury bills? So treasury bills are short-term instruments that the government uses to borrow. So by short-term, I mean these instruments run between for a period of less than 1 year. And then government bonds are relatively longer term. These ones run for more than a period of 1 year. And in Zambia, the shortest period is 2 years. So for treasury bills, we have four instruments. Four treasury bill instruments: 91 days, one for 91 days, one for 182 days, 273 days, and 364 days. So in short, we have quarterly instruments on treasury bills. We have for 3 months, 6 months, 9 months, and 1 year. Then for government bonds, we have 6 instruments. The shortest instrument on the government bonds is a 2-year bond, then followed by a 3-year, a 5-year, a 7-year, a 10-year, and a 15-year bond. For treasury bills are strictly discount instruments. By discount instruments, I mean you purchase them at a discount. So for instance, if I want a maturity value of say 1,000, and I'll pay a price lower. So I might pay, for instance, 800 kwacha to get 1,000 in 1 year. What that means is that I've purchased 1,000 at a discount of a discounted price of 80. So the difference between the discounted price and the face value or the maturity value in my example, which is like 200 kwacha, is your earning, which we term as your discount. For a bond doesn't necessarily have to be a discount instrument. It can be a discount instrument, it can be a par instrument, or it can be purchased at a premium. So like I mentioned, for a discount instrument, you're purchasing an instrument at a price lower than its maturity value. So for instance, if I pay 800 kwacha for a 2-year bond to get 1,000 in 2 years, then I purchase that bond at a discount. It can also be at par. At par means I pay 1,000 now to get 1,000 in future. So now, I mean, like, why would someone do that? Or it can also be at a premium. I pay 1,000 now to get 800 in future. Then the same question will be said, but why would someone do that? It's because the other feature that the government bond has is that it pays you a coupon payment or interest every 6 months. So if you add those coupons together and they are more than what you pay in terms of premium, for instance, if I paid 1,000 to get 800 after 2 years, but every 6 months I'm receiving 100 kwacha, it means in 2 years there are 4 coupon payments. I would have received 400 kwacha. So it compensates that loss in discount. So that's why a bond can either be issued at a premium, at par, or a discount. But for Zambian bonds, currently they're being issued at a discount. This is because we issue them at a fixed coupon, but we let the interest rates be market determined. So now, because actually what determines whether a bond, for those that are sophisticated, for those that are not sophisticated, don't mind about this language, but I just want to address the ones that might be asking the sophisticated questions. The reason why a bond can either be at a discount or premium or at par. This comes the difference between the coupon payment, the coupon rate, and the interest rate. So if the coupon rate is lower than the interest rate, then that bond will be issued at a discount. If the coupon rate is equal to the interest rate, then that bond will be issued at par. If the coupon rate is greater than the interest rate, it means that bond is a premium bond. So those are things, but never mind about that. Currently, our bonds are being issued at a discount because our coupons are fixed. What varies is the interest rate, and because the margin between the coupon and the yield rate or the interest rate is not being closed, they'll continue being issued at discounts. So like I said, the interest on government bonds is paid semi-annually, so you get a coupon every 6 months. So if it's a discount bond, which Zambian bonds are discount bonds. So for Zambian bonds, you receive coupons, and then you also receive a capital gain at the end. That capital gain is a discount between what you pay now and the maturity value in future. So how are these government securities issued? They are issued in 2 ways. So we have 2 windows. I may call them windows. So they're issued in the auction. By auction, I mean we invite bids from the general public to submit. So we'll be in the market looking for a certain amount of money. Currently, for Treasury bills, we look every time we look to raise 2 billion kwacha. For government bonds, we look to raise 2.6 billion every month. So for Treasury bills, we hold these auctions every 2 weeks on a Thursday. We had an auction yesterday. For government bonds, we hold these auctions once a month. We held, I think, the last one on the should have been 25th. I can't. It should have been last week. We held on the 21st. We held the last bond auction on the 21st. The next bond auction will be 18th February. So what we'll do is, like, for instance, for a Treasury bill, I will be in the market looking for 2 billion. So I'll invite bids from the general. I'll invite bids from the general public. People will submit their bids looking to lend money to government. So now these two are separated. We have the competitive auction and the non-competitive auction. The competitive auction, this is where the okay, so sorry, Doc, is Prof, just a moment. My boss wants to join in, so I don't know if I can send him a link.
Yeah, go ahead, please. Yeah, no worries.
Okay, let me just send him the link so that he joins in. And
so while Finzi is doing that, the people that just joined, we have Onward, we have, I don't know, I missed other people. Victor, Mr. Mali. Maybe you should go to the chat and put in your full name and the penta. So you go to the chat at the bottom and then put in your name and the penta.
Yeah. So Prof, his name is Jacob Mkandawie. He's my assistant director.
Nice.
My supervisor. So obviously he would want to make sure that I'm working and I'm saying the right things.
Well, we shall welcome him. No worries.
Okay. Yeah. So yeah. So like I was saying, these auctions are split into 2, competitive and non-competitive. So on the competitive side, what happens is everyone submits a bid. So like every borrower, we all want to borrow at the lowest interest. So what will happen is I'll have a lot of bids come through, and then I'll start allocating from the cheapest. So for instance, someone might come in with 1 million at 10%, could be the lowest price. Then I'll pick that. Then someone will come in maybe 100 million, a big investor will come in with 100 billion at 11%. Then I'll pick that. It means I'm covering my basket. I'm going like this until I fill my basket. So for instance, I fill my basket at 15%, and I still have bids above 15%. If I'm okay, then those all bids that are above my cutoff will be rejected. Then everyone below who I had accepted will be upgraded to the cutoff price. Will be upgraded to the cutoff price, and they'll all get that one price. So we use what we call the Dutch system. where we allocate these instruments at one single price. So our allocate, if you came in at my cutoff interest rate or lower, you are cheaper, I'll allocate you and upgrade you to my cutoff. So now I might be using price and interest rate interchangeably, but in actual sense, they are negatively related.
So
for a higher interest rate, you pay.
Sorry, because I might forget some of these questions. Can we ask while you, or is that you want us to reserve our questions up to the end? Or can we ask as you go? Because some of these questions I might forget. I've written them down, but
okay. Yeah,
is that okay? Kapatamo, is that all right to intercept, or you want us to just write them down until the end? It's up to you.
I was hoping we would ask at the end so that.
Okay.
Yeah.
If
it's okay with him.
Yeah. Okay, that's fine.
Yeah.
Okay. Go on.
Okay. Yeah. So, and then when the price is determined in the competitive window, that is applied now to the non-competitive side. The non-competitive do not have to be sophisticated. You don't worry about the pricing. You don't worry about what the market is. Yours is just to put to say, I want this future value. I want this much. Whatever price you will be determined, I'm okay with it. That is a non-comp. Now, what distinguishes these two windows? I mean, like how do you fall into these two windows? For the non-competitive, it has to be for amounts between 1,000 and a maximum of 499,000. So we call this our retail window because we try to capture the retail space in this window. And by experience, we've well, which might not always be true, is that the participants in this window are usually the unsophisticated. Okay, they will not understand how to calculate this price or what, but obviously from experience, it's told us that actually most of us fall into this same group. But then for the competitive, usually this is for amounts above 500,000. So what determines which window you participate on is how much you are coming in to invest with. So from this, you can see that the minimum amount that an individual can invest in government securities is 1,000 kwacha, because for the non-competitive, it's between 1,000 kwacha and 499,000. So the minimum, ideally, it means the minimum that you can invest as an individual or a company is 1,000 kwacha. So if you have funds that are more than 500,000, it means now you fall on the competitive side. And we place our bids at face value or at maturity value, and that maturity value moves in tranches or multiples of 1,000 for the non-competitive. So if I have more than 1,000, the next tranche I can place is a 2,000. So I can't place 1,500 in face value. It has to move in tranches of 1,000. For the competitive window, it's 500 and above. And then for the competitive side, it moves in tranches of 5,000. So from 500,000, the next tranche will be 5,500. I mean, 500,000, 500, 5,000, 505,000. Yeah, 505,000. Okay. So now, who is eligible to participate? Companies, individuals are all eligible to participate. For Zambian citizens, obviously, you must hold NRC or valid ID, preferably NRC. And the number one requirement is that you are registered on the Bank of Zambia Securities Depository, which is we call it a CSD. This is just an electronic account in which we're going to hold your securities. So because there's no limit to how much you can hold in these securities, and there's no limit on how many times you can participate, if you are a very active participant, it will be very important that these records are kept for you nicely. So that's a first requirement. And because we also need to pay you, because remember, government is obliged to pay you at maturity. Your maturity process. We need your account details so that when we send to the bank, it goes straight into your account. So you must have an account with a local commercial bank in Zambia. So this is very important. So there's two things: you need to register on the CSD, and you need to have an active local currency bank account, because these are local currency instruments. They'll pay you in local currency. So in terms of the participants, we have business firms, we have institutions, we have foreign entities who are both individuals and companies. And we have locals who can be individuals or companies, cooperatives, however, whatever bodies you would want to register. So this is how the CSD application form looks like. It's basically a one-page document. It's a very easy document. It's what we're just looking there is just our KYC, or know your client information. So it's a basic information that is required everywhere: your name, your age, gender. Unfortunately, in Zambia, gender is not very sensitive, so we still think it. So we want gender, and then because ZRA has been insisting that every account holder holds a TIPIN account. TIPIN number, we need that TIPIN number as well. Then obviously physical address and postal address in Zambia, telephone, and now with COVID, most importantly, the email, because ideally we used to deliver whatever letters or whatever certificates we have to deliver to your physical address, but now because of this COVID, we're relying more on the emails. Then that's part one of the application form. Then the second part of the application form just talks about your account details, because remember, like I said, this is a contract between you and government. Every time you invest, you enter into a contract between you and government makes that promise to say they'll pay you at maturity. So we need those account details. So it's the name of your commercial bank, the branch, and most importantly, your account number. And then part three is this is the signatory part. Who is the owner of the account? Who has a right to operate this account? Just like a bank account, when you open a bank account, you fill in those mandate forms and you give them your signature. This is basically that part. So you just fill in, you sign. So if it's a joint account, for instance, say you and your spouse, you both fill in and you sign. And down there's where it says preferred start date of registration. You would want to register as soon as possible. So the day that you're filling it in, you can put that date there. Because with opening the CSD account, you're not committing that you're going to be an investor. I can open it and just leave it active. And then when the time I have funds to invest, then I can. So it doesn't necessarily mean that you can only open this account when you have the funds. It's actually advisable that you open, so that the time you are you're about to invest, you already have the account. You don't have to start panicking to wait whether your account is open or not. So it's always advisable to do this before you even start the investment. So the second page just has, I think, one survey where you read the terms, you consent to the terms, and then also just a survey of how did you get to know about this, just for our own marketing purposes. And then so assume you've created this CSD account. Now you are ready to invest. How do you go about to purchase these instruments? So you can purchase these instruments through Bank of Zambia. We have bid application forms. You can fill in a bid application form. We will assist you if you have any problems, we'll assist you, or you can just write a letter to your bank to instruct them to do it for you, because they are connected to our central securities depository. That's the platform we use to auction these instruments. So the bid can be done by your bank, or it can be done by Bank of Zambia. If you choose to do it directly with Bank of Zambia, the fact that your money will be sitting in a commercial bank, I will not see that account. I cannot go beyond. I only see what the commercial bank have. I can't see what they hold in terms of our clients. So for me to be sure that you have that money, I'll need your bank to confirm. So they'll need to issue what we call a letter of guarantee to say, yes, if Finzi is awarded this bid, as a bank, we are committed, we will pay on his behalf. I need that guarantee. So yeah, now one question, someone will ask, but why would people, or just rather write to the bank to say, do it for me? Why would I go through the hassle of filling in a bid application form and then get a letter of guarantee from the bank? You might be surprised that actually most people deal with Bank of Zambia directly. They prefer the bank just writing the letter of guarantee and they fill in the bid application form, for a simple reason that sometimes banks, because banks decide on how they collect their commission. Sometimes when they do it for you, they say we will be collecting a percentage of your income. So if it's a bond, every time you have a coupon, they collect a certain percentage. But if you come direct to Bank of Zambia, then they can't do that because they were not involved in that process. And for Bank of Zambia, we do not collect anything. Even the CSD account is free. We don't charge for opening that account. So for us, the only things that we collect are statutory charges, which are withholding tax on interest end, and a 1% handling fee. So I must also just mention that for Treasury bills, because Treasury bills, remember I said you purchase, they're strictly discount instruments. You purchase them at a discount, so you always get a discount. So that discount is what the tax and the handling fee is charged on. So in total, the total cost is 16%. So 16% of what you've made on your discount. Not the amount of money that you bring in is not taxed. What is taxed is what you make on the investment. So on Treasury bills, because there's only one cash flow on Treasury bills, which is the discount at maturity, that's the one that gets taxed. On government bonds, because government bonds pay coupons every 6 months, it's the coupons that get taxed. The capital gain at the end is not taxed. So for instance, if I purchased a 2-year bond with a face value or maturity value of 1,000 and I paid 800 kwacha. At maturity, I'll receive 1,000, which means I would have earned a capital gain of 200 kwacha. On government bonds, that 200 is not taxed. What is taxed to be the coupon payments every 6 months. So you can purchase these instruments either through Bank of Zambia or through the commercial bank. So I don't know if you can see this. So this is an example of a computation in terms of a treasury bill. So for instance, it says there, it says the price per 100. So what it's saying is that for every 100 kwacha in 364 days time or 1 year, I'll pay 86 kwacha 98 86 kwacha 9875 in way. Okay. So if I have 500, if I want to receive 500 after 364 days, so if I invest for a face value of 500, remember I said that our bids are placed at face value. So for instance, for a treasury bill, the same way you look at a fixed deposit, For a fixed deposit, if I have 100,000 kwacha now, and I place it at 10%, for instance, after 1 year, I'll receive 110 kwacha. My maturity value there is 110, but I call it, I'll say I'll have a fixed deposit of 100,000 kwacha. For a treasury bill, if I had the maturity value of 110, I always call a treasury bill by its maturity value, not the amount of money that I put. So for instance, if I want a maturity value in this case of 500,000, okay, at a price of 86. So I'm saying for every 100 kwacha I'll receive in 1 year's time, I'll pay 86 kwacha, 99875 in Ngwe. So if I translate that for an amount that I want for 500 in future, I'll have to pay 434,937. So basically, you just multiply that maturity value by the price and divide it by 100 because it's a percentage of 100 or 100 kwacha. So in this example, you see that if you had 434,000 and you want to purchase a treasury bill of 500,000 by paying 434,900, your discount will be 62.5 in Ngwe. So now, like I mentioned, for the discount on treasury bills, it's taxed 15%. You get a tax of 15% and the handling fee of 1%. So when I deduct those from the discount or the capital gain, in this case, the total costs or the total that I'll pay will be 10,410, implying that my net gain, your net gain now will be 54,652. So now what will hit your account is 54,652 plus the 434, which is 489,000. So if you put in short, in simple language, if you put in 434,937 now, you expect to get an amount of 489,590, meaning that they would have given you back your 434 and given you a gain of 54,000. So for the same amount, for instance, if I went into a 5-year bond, this was at 21.95%, but in the last week's auction, this interest rate rose to 22.25. So obviously the cash flows are higher than what we put in this example. So for instance, for a 5-year bond, if I have 500,000 now at 21.95, I would get a maturity value in 5 years of 740,000. This means that I would have earned close to 240,000 after 5 years. But because the bond pays coupon every 6 months, I'll be receiving interest or coupon of 34,188. So if I had to put it in context, if I have 500,000 now, in 5 years' time, at maturity, I'll receive 240 as my gain. Okay, I'll be paid my 500 and I'll be paid a 240 as my gain. Then within these 5 years, I'll receive 10 coupon payments of 34,100 each. So now if I multiply that by 10, in total, I would have received 41,000 in terms of coupons, plus my 240, that gives me how much? About 580. So you see, like, so I would have gotten my 500 back, and then on top of that, I would have, in its life, I would have made another 580,000. Okay, that's over 100%. So that's for 500. That's for a 5-year bond. So these are as part of the reports. This is what we call our prospectus or our invitation. So every time we're in the market or we'll be holding a bond or treasury bill auction, we post in the newspapers. I don't know if we do it on I think we also do it on our Facebook page. And then on the website, it's posted on the website as well. There's a tab on the website that is strictly for, when you go to the Bank of Zambia website, there's a tab at the end that just says T-bill, bonds and T-bills, or T-bills and bonds, but it's T-bills and that deals with this. So when you click there, you find all this information. So if you get to the invitation, this is how we invite to the general public. So we'll state what we're looking for. So for instance, in this case, we have a 2-year bond. And at that point, we're looking to raise 300 million on 2 years. And it was split into the two auctions, the non-competitive and the competitive. So we always give 10% to the non-competitive. And because these guys do not compete, there is no chance that you can lose a bid. You can only lose a bid on the competitive side because you're competing. But on the non-competitive, you are guaranteed. So for instance, if I have bids on the 2-year that are more than the 30 million, what it means is that I'll still have to split that 30 million among everyone. So I'll prorata that amount based on the proportion that you placed in comparison to the whole basket of the non-competitive. So you get something, you can't completely, you cannot come out of the auction and get nothing on the non-competitive. You always get something. So if the total bids on the non-competitive are less than 30 million, it means everyone is awarded at full. Then the rest is thrown back to them, competitive to be allocated. So now from here, you see, I must mention here, for every time you try to get advice from, it could be your bank or any financial advisor, or sometimes you can even drop us an email or call us if you want guidance on how to fill in. The non-benchmark bonds are not very complicated, because as long as you know the interest rate and the price, it's easy to fill in. But the benchmarks, because for the ones below the 3, 5, and 10, these ones, we call them benchmarks because sometimes we reissue them. Like you see at the bottom there, it says reissue. If you look at the maturity dates, for the non-benchmark, it was 24th January, 24th January, 24th January. But for the benchmarks, it was December. So it means it first started running in December. So its calculation is a bit more complex, because it's already accrued what we call the coupon. So this one, for instance, the benchmark will pay the first coupon in June 27th. It will pay the first coupon. But for the ones that were issued last week, for the ones that only started running last week, on the 24th, we'll start those ones. Actually, they started running this week, 24th. So these ones will pay the first coupon on 24th July. So because now the benchmark, the benchmark was still offered last week. So the ones that purchased it last week will get their first coupon in June. So they'll get their first coupon 5 months from now. Now remember, they're supposed to, they'll get a full 6 months coupon. But because they're only going to hold it for 5 months, they have to pay me for that 1 month that I'll pay them. Okay. So when they're paying for this bond, they also include that 1 month accrual that they will receive in 5 months' time. That's why this bond, a benchmark bond, will always have what we call a dirty price. The non-benchmark bond will be clean because it does not have any accrual. So every time, if you want to buy a 5-year, 3-year, or a 10-year, you please make sure that you got that right. Otherwise, you might find yourself out of pocket. So it's advisable that you can consult us to say, okay, if I want to go in at 21.95 for this reissue that you're issuing, how much am I going to pay? And then we'll advise. So now after the auction has run, then we publish the results to show you the statistics of how it went. So I'll pick on the 2-year, for instance. I'll just speak to the 2-year. You see there the 2-year, so there's an IC number there. The IC number is like a serial number for that bond. Okay. And then, so the amount that I was offering, the amount that I was looking for on that tenor was 185 million. And then we received a total of 565 million in terms of face value of future amount. This is what people wanted to be paid in 2 years' time. And then what that translated to a cost, so they were ready to pay 519 million for that. So, but what we allocated was 342 million. So I was looking for 185, but I ended up allocating 342, which translated to a cost amount of, so I raised my cash, the cash that Bank of Zambia raised was 292 million cash. So when you go the next column there is the cutoff price. So there it says for every 100 kwacha that these investors will receive in 2 years' time, they paid 85 kwacha 43.59. And the yield rate there was 17.99%. Then that range gives you the range in which the bids came through. So the lowest, you can see, I think, who was very risk averse, came in at 15%. And the cutoff there was at 17.9. So it means all the bids that came in between 15 and 17.9% were successful. And because they were successful, they were all awarded you see the previous column there that says cutoff yield rate. They were all awarded the cutoff yield rate of 17.99. So, so this guy that came in at 15 knew that, well, regard the 15, I stand a very better chance of getting it. And if it's too low, I'll still be upgraded to 17.99. And then the ones that are unsuccessful yield rates, so these are market players who really want to test the market. Okay, sometimes they'll judge to say, well, maybe the market doesn't have so much money. And these are the sophisticated ones, the banks, the foreign investors. These are sophisticated ones. They'll think to say, no, 17.99 is too low. Maybe let me try 19.5. If what they're looking for, if the amount bid is less than what they're looking for, there's a chance that they might pick my bid. So these are like market testers. These are the ones that drive the market. So for instance, after the August elections, the auction after the August elections, you saw a huge drop in these yields. Why? Because these sophisticated guys realized to say demand for these things will grow. They came in very low and wiped out the whole market. And I must mention that it coincided, our foreign participants come in heavy. In that auction, the only local investors that were successful were on the non-competitive, because they don't lose on the non-competitive. Everyone on the competitive lost to foreign investors because they just wiped out the whole auction. So now these are the sophisticated, and we have huge. I think we're sitting between 15 and 20-25% foreign investment, which is huge in terms of things. So you can imagine how much demand these instruments have across the borders. So what are the benefits of investing in government securities? Okay, so firstly, it's an alternative investment opportunity. Okay, the fact that the government will pay you, one, you won't lose sleep. Lack of a better term or better statement, you know that you'll be paid, you won't lose sleep. And it's an alternative form of investments. There's a lot of investments opportunities going in. People create companies, people some do very risky business. But so just as an alternative investment that you can look at, this is one of them. And it's paperless. Okay, so because it's paperless, we like I said, we keep it in electronic form. That's the reason why we insist that you hold a CSD account. Yes, but obviously I mean, like we are old fashioned. We always want to have the paper with us that we can print for you. If you want a certificate, if you want your statement, we'll print for you and stamp it and sign it for you. But ideally, the paramount, the core information is held electronically. And it allows, this allows, because it's safe, it also allows for transactions that vary in denominations. Okay, so you don't, if you have it, for instance, you can even sell it for, you can sell a portion of it, maybe 1,000. If you have like 2,000, you can sell 1,000 and remain with 1,000. So it's easy. Unlike for a house, if you only want 100,000 and it's worth 500, you have to sell the whole house and just think. So the other, just to follow up on that, the other advantage is that you can use it as collateral, and because it's so liquid. By liquid, I mean you can easily sell it. It's as good as cash because it's so liquid. It's one of, if not the best form of collateral in the financial systems. Okay. For instance, if you want to get credit from a bank and you place your house or your car, if you default, I think all of us here have tried to sell a car or maybe a house, or we know some people who've been trying to do, and we know how long that takes. Sometimes it takes months. So you can, but for these ones, it's just hours. You agree and the movements are made and you get your cash. So it's a very liquid instrument. And the fact that you can separate it in different denominations. So for instance, if you hold a bond for 100,000, but then for some reason, the investor of Zambia want their tuition fees for your child or what, and you need 20,000, but you're holding a bond for 100,000, you can sell off part of it to raise that 20,000 and you remain with a whole lot. You don't have to sell all of it. So you can even split it. For instance, if it's 25,000, I can say, okay, every year I'll be selling off 25,000. Every time it comes, I'll be selling off that 25,000. That's a beauty with this. So it's so safe and secure. And like I said, this is a contract between you and the government, and domestic debt is part of a constitutional mandate that it's paid on time and thing. And please do not confuse this for other subordinated debts like what's the most common one? The contractors and arrears. Those are different. Those are different things. This is constitutional debt. If it's due today, it has to be paid at 8:15. So because of that, it's safe and secure. Like I said, you have a peaceful mind. Unlike rental income, where you have to go and knock on people, sometimes carry chains to lock off gates and thingy. This one, you just sleep and your money comes. And obviously, maybe the point I'm trying to drive at, sometimes let's think to diversify and not get into, all of us cannot build flats, because flats also have their own expenses. Yeah, every time you're changing tenants, you have to do repairs and what. So there's always those things. But for this, there's no cost. The only cost is you already know about it, because which speaks to the next point, because your interest rate is locked in. Once you lock in, today, if I lock in and say, okay, you are accepted, I've accepted your bid at 21.95, and these are the coupons, you'll be getting 34,000 every 6 months, regardless of what happens to the interest rate. Should it go up or fall, you already know how much you'll be getting paid. So that won't change. You already know what tax you pay, so you already know your cash flows. You cannot go to the bank and find that you have less. Or you cannot dream and say, maybe in future it will be more. Once you lock in, if it's 34,000 that you'll be getting every 6 months, you will think. So at the end of this, before I get to the Q&As, I just want to give you just one illustration, one simple example that you could use this. I don't know, let me just see if I can share. I didn't open it. Sorry, just I hope you could allow me to. Okay, just give me a moment. Let me see if I can share this. Okay. Okay, let me share. Okay. Can you see that?
Yes, we can.
Okay. So I just don't know how. Okay, let me just. Okay. So for instance, let's say I'll give an example of let's say I want to receive or like especially for I'll give an example of maybe you, Prof, who's in the diaspora and you have all these commitments that you want to think. Let's say you have a student here that you're sponsoring at UNZA or something, and you want to create a bond that will pay maybe 1,000 for their pocket, and then I'll say, okay, I'll choose, for instance, a 2-year bond, okay? And I want to be receiving 1,000 every month. I want to create a monthly payment system. So I'll say, if at the current price of at the current yield of 17.99, how much do I need? So I need a face value of 26,000. Remember, this all falls in the non-competitive. So I'll round it up, maybe say to 27. Okay. So it means that because I'll pay is that so sorry. So I'll pay like for me to receive like 1,000 every 6 months, I'll need the face value of about 26. So let's just make it 27, which is about 22,600. So what I'll do is every month, because these auctions are held monthly, every month I'll set aside the 22,600 and purchase a bond for like 27,000 face value. So what it means is that, so for instance, if I started in January, okay, I purchased a bond for 27,000. So if okay, let me just do this. How much would that be? So 27,000. Okay. Okay. So if for 27,000, I want 23, which would give me what would be the face value. So the face value would be 27. 27, 1, 2, 3 by 0.045 by, I hope my boss is not in here because so okay. So it means if I do 27, if I have 23,000, if I'm paying 23,000, so if for January I have 23,067 kwacha, and then I purchase a bond for 27, a 2-year bond for 27. What it will mean that if I purchased it in January, it means that it will pay the first coupon in July and the next coupon in January 2023. Then if I do the same thing in February, it means its payment cycle now is February and September. If I do in March, it means the payment cycle will be March and October. So I go on. All I have to do is just purchase 6 2-year bonds, which will cost me something like by 6, 138,000. So with 138,000 kwacha, I can create a fund that will be paying 1,000 every month. And I can put a standing order in my bank to say, please, every month on this day, pay this account 1,000. So you take care. And the issue is that, look, you'll be paying, this is like you're setting aside 138,000. You're not using this money. This money is still yours. So when these bonds mature, you still retain your money, but you would have been paying 1,000 every month. So you purchase like 6 continuous 2-year bonds. It means you've created a payment cycle of getting income every month, because remember, one bond will pay you coupon twice a year. So if I spread them monthly, if I get 6 bonds and spread them monthly, it means I've covered the whole year, because they're paying me twice a year. So 2 times 6 will give me 12. It means I've created a fund that can be paying every year, every month. Yes.
Do you have to buy all of them at once, or you do it monthly, as you've said?
No, you can do, if you want, you can, if you're disciplined enough. Actually, it's about discipline, because if you purchase them at one go, if you purchase it at one go, and it means that you only be receiving 2 payments in a year. Now it's up to you now to
so
spread.
That's why you have to do it every month.
Yes. So to avoid that hassle, because I might have 6,000 now. Say, okay, this 6,000, 1,000 is for January, 1,000 is for February. But you know how, especially us Africans with black tax, it won't survive. I don't think it will even get to June. So to avoid that, you would rather just do it monthly, so that it just does. I mean, every time there's a coupon payment, it turns into a monthly payment. So this you can do even. So for instance, I would say, let me say.
My question was,
Yeah.
can I give Bank of Zambia, if I have an account, I give them that and I say, this amount I've given you, can you purchase in January and February? This, I give orders and then I walk away.
No, you can't, because now every time you have to enter into a contract. So okay. I can't just the same way as if you get your maturity, that you can't instruct me to say, no, the time you maturity, keep it so that you enter into another one. No, remember the agreement is that I need to pay you. And because these things border on financial integrity, you can decide, say, okay, keep my money and turn it over. And then the next day you say, no, but you just failed to pay me. So it has to hit your account, and then you make the decision of whether to bring it back.
Oh, okay.
Yes. So so now for like my senior citizens who are planning retirement, for instance, I would say, let's say you've sorted out everything. Wow. You have your own house, you have like schools, you're not doing these school bills, you've sorted everything out. All you want is just a retirement payment system, for instance. I would say, like on average, maybe a normal household who are not paying rentals and what, probably their monthly expenditure is maybe 10,000 kwacha, for argument's sake. Okay. And then I say, okay, for this one, I'll say I'll do a 15-year bond. Okay. It means a 15-year bond will mature when in 2037. And currently it's at 26%. Okay.
That's high.
Yes, it's at 26%, and it pays the coupon of 14%. So how much do I how much do I need to invest. So
every month.
Yeah. So like, yes, because it's paying me twice a month, it means every month I need, if I've cash of, every month I need cash of about 93,000. So now if I multiply this by 6, for instance, okay, it means that I'll need the total cash of 561,000. Okay. So for me, who has about 15-20 years to retirement, this would be my target. So can I raise cash of this amount so that by the time I'm getting to that level, I would have raised enough cash to set up a retirement. So I'll buy like 6 15-year bonds, for instance. Okay, so I know that this is my target. So if I have 500, if you're retiring and you have about 561,000, then you can replicate this.
Mm-hmm.
Yeah. So with that, I'll end my, let me just use the same spreadsheet to give my contacts.
That beats the whole purpose of pension funds. You can make your own pension scheme. Wow.
Yes. Actually, NAPSA is our biggest investor. So this is where, yeah. So in terms of, sorry, I didn't put it in the presentation.
But this is being recorded, eh? It's being recorded though. We can download it. Yeah.
Yes. So, but in terms of BoZ contacts, these are our contacts, BoZ contacts, and then that's the email address you can send to government.securities@boz.zm, and then our phone number is 260-399-399 or 343 and 300. Okay, now this will be tricky. Anyway, I'll just, okay, I'll leave it like, and I'll leave it like this. So that's just
that the code for Lusaka, the 211.
Oh, sorry. 211. Yeah. Yeah, maybe I'll say telephone. I'll say telephone because I think it's recognizing a formula. Okay.
Wow.
Yeah.
This is.
Yeah. So, Prof, that's my presentation, and I just had my boss in the background. So I don't know. Maybe at this point, maybe I just ask him to come in if he wants to say anything, and then we can move to the Q&As.
Absolutely. Mr. Mkandaure, thank you so much for coming in. And yeah, we really appreciate Finzi for doing this for us. So basically, we have a speaker series at our school, St. Paul's, and this year he's the first presenter. So thank you for joining us. And if you have anything to add, please add, because there are some questions in the chat, and Charlo has his hand up already.
No, thank you very much. I just joined in to support Finzi, but we are grateful so that you allowed us your platform to share what we see in our viewers, our work. Indeed, it's an opportunity that's been sitting out there, and banks have exploited this, and pension houses, they largely sit back and just come to auctions and their job is done. The formulations that Finzi has shared really is what is pension funding, actuarials and whatever. It's just computing the cash flows against the liabilities. But what we are saying, we are reducing that mathematical complexities of actuarial and then cash flow and whatever into just basics of this sort of things as Finzi has presented, to enable at an individual level that you can complement your NAPSA payments and whatever pension scheme you belong to, by also creating a complementary cash flow. So you are more or less covered for many other eventualities post your working life and so on and so forth. So we are happy we are able to share this with our citizenry. Obviously, it's not an easy subject, I must say. Bonds and these things are quite evolving, but I think we try to package what we feel at an individual level you can quickly assimilate and make a decision whether this is an investment you want to pursue. From where we sit, we think it is good for the pros that Finzi has articulated. And we just feel a lot of people have not come through this because of the complexities and so on that are associated. We've tried to repackage the information to the public to make it easy for decision making. The mechanics and the management side also, it's very, very easy on the client side. We do most of the work. We manage the CSD accounts. The only work we feel the client does is just the registration and then placing your money. Beyond that, we are the ones who are in the engine room doing the heavy lifting. So to that extent, we feel it's also an easier to manage investment than a house. A house is only nice when it is standing and it's new. I think beyond that, there are leakages and all those things. So it's really just an investment option. We want to speak to everybody who has an ear to us and to consider. It's an auction because it's competitive. There's a limited space for it. And so the quicker decisions are made and you start coming to the auctions, the better. Because as Finzi said, this is not like a house one bullet point investment and it's standing out there. This can be an investment over time. You are piling up your portfolio, but the returns get realized over time. So you don't have to look for that big jackpot before you come through. I think he mentioned your minimum 1,000. Some of us, it's what we live in these unholy houses every Friday. But we are saying you could think otherwise and maybe start pushing something towards this. It's very good. I'm speaking to brothers here. These are not things we speak to banks about, but I'm just saying, look, if you had 500,000 today, let me say, and you have a plot, say in our Chalala area, and you built that house, I can bet you won't get rent to more than 3,500, 4,500. If you put that same amount on a 5-year or 10-year, or if you are disciplined, as Finzi said, on 15-year, you'll get better than the rental. That's the mathematics, at least we have done.
Wow.
Inflation. And
Thank you so
Bank
much.
of Zambia, is pursuing a low inflation. So really, I'm just trying to market this thing. But thanks so much to all of you, and all the best with your considerations on this. I think that's all I'll say, Finzi. I'll just participate in the Q&A. Thanks.
Thank you.
Thank you.
Hello.
I'm going to ask a compound question, but try to be mindful of other people's time. Finzi, first of all, good job, my Clement housemate. Nice to see you representing as well. My first question is regarding the publication of the auctions. I assume this is something that is put in the Zambian press, in the newspapers, and I think you did mention Facebook. For those of us not on Facebook, I think we probably miss out. How long does that auction last? Is it a day event, a week, or and is there like a guideline on when exactly it's maybe first of the month, or first 5 days of the month, or is there a particular schedule of when these auctions are done? Thank you.
Okay. So, Prof, will I respond to?
Yes, please go ahead.
Okay. Mr. Chari, thank you, and it's been long. I was my senior at St. Paul's, Clement Oye, like you said. Very smart man. I hope he's still smart. In terms of dress code as well. One of my, yeah. So
news houses of your repute have had a number on me.
Yeah. So in terms of publication, yes, we do publicize these invitations, and they're on the website. So we produce quarterly calendars. So if you go on our website, which I've put there, www.boz. Or maybe I should have just copied the link. But anyway, when you go there, there's a tab that says bonds and T-bills. When you click there, there's what we call, you find a lot of tabs there. You find issuance calendars. So we issue calendars every quarter. So for this quarter, from January to March, we have the dates of all auctions, both treasury bills and bonds. And then in terms of how long does the auction last? So like, for instance, we advertise and say we have an auction on the 17th of on the 18th of February for bonds. So what will happen is if you want to place your applications with Bank of Zambia, you can start even now. You can send through the applications. We'll keep them, but we'll conduct the auction on Friday, 18th February. So we'll open the auction the week in the week of the auction, which only Bank of Zambia has access during that time. So if you send me your applications now, I'll keep them. When I open the auction for a week, I'll just be placing in the bids. And then the banks only have Friday. Friday is a day they'll place their bids. So your bid would have already been in the system. So, but in terms of, it's not a first come, first serve basis issue. We, like I said, these bids are treated or are allocated based on their cost. So it's how much you want government to pay you. So like I said, government will start with the cheapest. Like any other borrower, we always want to borrow cheap. So we'll start with the cheapest. So it's not how long or who came first. It's who has the lowest cost, and then we allocate like that. So in terms of timing, it's advisable that these bids reach at least a day before, but there's no need to do it in the last few days. You can do it 3 weeks before, because you already know the dates on which these auctions will be held.
Thank you.
Tambala, you have a question?
Yes, please. Finzi, can the CSD account be applied for online, or it has to be done walk-in?
Okay, we used to allow both walk-in and you can send it via email to that email address, government.securities@boz.zm. I think I was hoping Mr. Mkandaure would inform the House that the Bank of Zambia is seriously working on a platform that will allow online registration of these accounts. We are working in the background. We have a solution that we hope to roll over in the next few months. We're still doing our internal controls and testings. But as it is now, like I showed you, the form is just a one-page, a simple information. So you can just fill, you can download it, print it, or those of you who are computer experts, I don't know how you fill it. You fill in PDF forms, but afterwards you can just scan it back with a copy of your NRC. You don't need to walk in. Actually, now the building is not being accessed because of this COVID pandemic. So you don't necessarily have to. So even for the bid applications, you just send them. So you can do everything in the comfort of your house. You can send a request to your bank via email, I think, to request for a letter of guarantee, which they'll issue to us. And then you can fill in a bid application, scan it, and send it. Everything done from the comfort of your PC. So you don't necessarily have to walk through. but we're trying by all means to make it easy so that we just go to the website and fill it in and just upload it. But for now, what we do is you just print it, fill it in. You can fill it in with a pen, and scan it and send it, and attach a copy of your ID. For Zambians, we prefer the NRC. If you don't have at least a valid passport, but that clearly shows your NRC number.
Finzi, I also have some questions, but before I ask, we have some people that just joined us recently. I'd like you to add your name and your painter in your chat so that we'll know all the St. Paul's people that came, because every quarter we'll be giving a prize for the person that comes regularly to these meetings. So please go ahead and add your painter in the chat and your name as well. Mr. Katunta, do that as well. Okay. So my question was, can trusts buy these securities? That's number one. So I set up a trust. Yeah, thanks, Jason. I set up a trust. Can the trust buy these securities? And the trusts, mind you, are being used for paying school fees for kids in boarding schools. And then the other one is, do you have foreign currency securities, or it's just local currency? And then the last one is, are these bonds transferable, like in a will?
Okay. Yes. So for a trust, yes, you can create a trust. Actually, it's encouraged, saying that in this world, trust, trust between spouses and other relatives is slowly being eroded. It's always encouraged that yes, you can create you create this trust. You can create a trust. We have a number of them. So obviously, if it's a legal trust, it will have it's more or less like a recognized entity. You will be able to register, and obviously in terms of who manages that, that's up to you. So the same way you can open a bank account using a trust account is the same way you can open a CSD. And then in terms of do we have foreign currency bonds? No, we do not. These are strictly domestic currency. As Bank of Zambia, we manage the domestic side of government debt, and the foreign side is managed by the Ministry of Finance. So for the foreign debt, we have 3 bonds that are in circulation by, I think you know the story. And please do not confuse the two, because this one is local currency and strictly managed by Bank of Zambia. That's why for these kind of instruments, you've never heard of a default on this one, because this is our local currency, and it has serious implications in terms of default on our financial systems, because these instruments are used among a lot of local financial players in terms of lending and borrowing from each other. So it's very critical that they're credible and they're relatively risk-free. So that's why, and it's easy to manage if it's local currency. We cannot issue foreign currency as Bank of Zambia, because we have no control over those currencies. So these government bonds that we issue are strictly domestic currency denominated. Then in terms of transferable, yes, for instance, if I held bonds and I answer the load score, obviously the same way that the estates are transferable is the same way. So if the court determines that or there's a will that says that this kind of property or this kind of assets are to be split, yes, they can be split. like I said, they're very divisible. So in whatever, if it means one person getting 1 kwacha, they will get 1 kwacha of that bond. So yes, it's very transferable. It just depends on the power of attorney, what is determined as who's supposed to receive.
Okay. Do we have to raise our hands or we just?
You can speak, but if you raise your hand, then we'll see you that you're in the queue. But go ahead, Prof.
I'm looking for a hand here. I can see it somewhere. Some of us are technologically challenged. Anyway, I have 2 questions here. Are these calculators, or I mean the cash flow estimator you just showed us, are they available to people so that they can maybe play around in their homes with the little money that they have, so that you basically make a decision even before you do apply and see whether it makes sense or not? Are these software or calculators available to somebody like me, or are they so difficult to? Because I remember when I was getting my mortgage, I had to do it on my computer to estimate what I want on a mortgage, whatever calculator they call it. So then I gauged myself as to what I could afford. But is it the same in this case, that we have this type of software for us to do our little estimates on our own before we approach you? And then the second question I have is regarding you said there's about what, a big percentage of foreign investors that come in with the buying of the bonds. Are they competitive bonds? Is there a deliberate government policy now that we want to start empowering Zambians in some of in our country? Is there a deliberate policy as to limit the amount of foreign investors we can attract to these bonds, or is it just open to any foreign investor with millions of dollars to come in and buy off our bonds? I don't think it's fair to Zambians to see a opportunity, because this, to me, I look at this as an opportunity. I didn't even know about this, so as an opportunity for me to contribute to my country as well as better myself financially. So I think it's an opportunity for us to be a little bit selfish, a little bit. If we can't have Zambians, especially some of people like Victor here, Kabatamoyo, who can probably afford 1,000 kwacha per one. People in diaspora, this is an opportunity for us to send something back home and invest in our country. And I think if we are given that opportunity, I think we can see what we can do, because I think it's a very good thing. So what I'm trying to say is, are we trying to, are there any things that are put in place to protect the interests of Zambians? Thank you.
Okay, thank you very much. Yeah, so in terms of the calculator, we have not made this calculator available on the website. Like I said, we're working on a platform in which we want all these things to be there. I think the simple reason is that, like if you followed my presentation in the beginning, if you were in, I did mention when I was when I was running through the invitation, the prospectus. Yeah. Yes, I said there's 2 types of issuances we do. There's the non-benchmark and the benchmark. Yeah. So the calculator that we have is usually for a non-benchmark. Now, the issue that we had was people were using it to calculate the benchmark prices. Now, because of that accrued portion, they were not able to, they would find that they overdraw themselves at the commercial bank. So we deliberately did not make that available, but our guys in the background are really working towards splitting so that it clearly states this is a thingy. But upon request, we can provide you the calculator and just give you the basics on how to use it. Yeah, but in terms of Excel, I think I know the software that you're talking about. It's about, I think, a loan repayment schedule. Yeah. Excel does not have that kind of, that I know of, a bond schedule that you can use. But you can use Excel You can use Excel if like for the financial guys, I think it's price. Should be price. Well, I have to find, but it's easier. Let me just if you request, I can just give you a calculator. Yes, but you can use Excel to find the price, but you have to know the parameters. That's what the problem is. It's got like that. It's got like, yeah, I think 7 parameters that you really need to know. So that's why the complexity is. But we are trying in the background to have that available, and I think we'll draw it over with our online platform. Then in terms of foreign investors, simple reason that we are not restricting foreign investment. I think the biggest challenge in Zambia is not that we don't want to empower our citizens. I think these instruments have been in existence for a long time. It's just that we have, I think maybe we as a country, Bank of Zambia and government, in the past, I think we have not done enough to sensitize our citizens, because like you say, it's not surprising that actually it's the first time that you're hearing about this. Even in our own building, our own 2 buildings on Cairo Road, most people only know about them when they're about to retire, and yet they see all this the thing when they're retiring. That's when they tell them, no, you know what, go and see Finzi. It does a spreadsheet for you to see if you can invest. And then when the guy comes and says, so how much are these things? Say 1,000. Get surprised. You mean, yeah, all these years, 27 years I've been in this building, you mean I would have been doing this on yes, you would have. So the issue has always been that it's more on the financial literacy side than thingy, because these things are available for both you and the foreign investors. There's enough room. Okay. And for me, as an issuer, as an advisor to government, I want these instruments to be as competitive as possible. I want a lot of Zambians to participate, for one simple reason, that if I have over 60% of these instruments in individuals and not big players like NAPSA, the banks, it's very easy for me to raise financing cheaply. Okay. Then I'll need these foreign guys, because I need those dollars. The moment they bring in the dollar, because they're foreign, they're domestic currency denominated instruments. For them to participate, it means they need to convert dollars. I deliberately did not want to say that post-August elections, you saw that appreciation. A lot of people, there was a lot of stories about Bank of Zambia, what. But the issue was that the foreign investors just bought bonds and brought in a lot of dollars. There was so much supply. That supply of dollars came through that same channel. Now, in as much as that is good, the opposite can happen as well. If they're coming out, they'll demand a lot of dollars and push the exchange rate up. That's why I am working so hard to get my local investors part of this, because I know once I have 60% in retail and 20% local guys like the banks and NAPSAs, and even if I had 10 or 20% in foreign investment,
it will not affect. Yeah, the effect, yeah.
They are neutralized. But now my retail space is less than 10%. So it just shows you that even the 10% that we give in terms of the non-competitive is never filled. So it tells you that there's, so it's not like we're restricting the local guys. They're not filling the gap. We've specifically set aside 10% for our retail investors, but that 10% doesn't get to be filled. If we get 1% of that, we are lucky. Usually it's less than 1%.
Wow.
So yes, so that's but for me, that this creates an opportunity, because I know collectively that 10% is little. We might have to move it up maybe to 20%. But we can only do that if that basket is being filled. So as it is now, it's not because remember, we also need these funds for government expenditure. So if I restrict my the foreign guys coming in, I'm also restricting government projects. So I need that, but I've protected my retail investment by setting up a certain amount that they need to access. But the only problem I have is that they're not filling that basket. So that's why government and central bank are trying by all means to sensitize our citizens and make sure and make it easy through online participation, so that we just make it easy. And hopefully we also cut out that aspect of going to the bank. If we can do online transactions, Visa or anything, something in those lines. Those are big projects that the central bank is engaged on in the background, so that we cut off certain hindrances and give access to our own local investors.
Thank you very much.
Also help our green economy drive, right?
Yes.
So, Charlo, I think Finzi has answered your concern about the low-hanging fruit there, because they seem to be pushing towards sensitizing people on the ground. Are there any other questions in the chat, or if you raise your hand? To raise your hand, you go to reactions at the bottom in Zoom there, and then you click on raise your hand.
How come I don't see that myself?
If you go to reactions, and then you just click on raise hand. Chilima, go ahead.
Hey, Finzi, sorry, good seeing you. Probably my question lies more, how competitive are your rates as compared to commercial banks? As far as I know, they do offer some fixed deposit accounts. If I'm wrong, correct me, they kind of work similar to how bonds, how you generate interest on bonds. And how competitive are your rates as compared to those?
Thank you, boss. Nice seeing you again, Mr. Chilim. Yeah, in terms of competitiveness, it's a very I think it's a very funny scenario that we have in Zambia, because ideally these are risk-free investments, okay? And usually for a risk-free investment, it has to be lower than what you get on the other side. But half the time you find that the risk-free investment is the one that is giving you better returns, unless you are a market trader who will go and negotiate with a bank and say, look, there's no way why would you give me 14% when I can get 15% from a risk-free? This doesn't make sense. When they know that, okay, no, at least you know what you're doing, there's that room to negotiate. But otherwise, when you go to their boards, their rate boards in the commercial banks, you find that for a 1 year, if you get anything above 10%, you're lucky. Yeah, so it also, yes, and also I think the issue that we have in Zambia is that I think we've gotten to for a long time, we do not compare these rates. We just walk in the bank and say, okay, just put in 1 year. And I think if you do not negotiate, you will not get a better rate. But trust me, it's very rare that they will give you a rate that is above a risk-free in Zambia. For instance, a 1 year is 15%. Trust me, I've heard the maximum I've heard is 13. The lucky ones are getting 14%. But to get 16%, you won't get, because they'll always tell you, say, look, Bank of Zambia is getting at 15%. And then also, you must realize that there are also players on this market. There are huge players on this market. So they'll get your money and they'll bring their money to me. Now, if I'm giving them 15%, what chances is that they will give you 16%? Because they have to get a margin off you as well. So that's where the challenge is as well. So half a time they're also coming to invest. That's why when you look at most of these products, from maybe insurance companies that say, okay, create for school fees and what. It's just basically playing around the same example I gave, but giving you a lower return. That's exactly what they're doing. That's why when you find in Zambia, when you find a financial institution that is offering you way yield rates way better off than the risk-free and also better than the commercial banks, this idea of saying you receive 50% every month or 20%, that's not possible. Yeah. Just every time you get to a scenario where there's that disparity, just know that that's a Ponzi scheme and it will think, because in Zambia, the way it is, most of that money is just being channeled to this, and they just give you, they get a commission of it because it's risk-free. They'll get their commission and give you, they get 15% and then give you 10% or 9%. That's how they're making their money. So in terms of competitiveness, I'm here to find, yes, there could be maybe banks, one or two, but beating the risk-free. Have not. I don't think we have a lot of those examples. So that in itself makes it very competitive.
Thanks, Finzi, and Luango Hoya.
Wonderful. Do you have any more questions? Well, yeah, it seems
I have one more. I have one.
Yeah, maybe. Please go ahead. Please go ahead.
In terms of buying these bonds that you said, I mean, you sell once a month, or for the bonds is once a month, and the bill
once a month, yes.
Yeah, the bills is. So if I buy bonds this month, and then again I buy next month, do you reconcile the two, or the two remain separate in terms of? Is there a way of? Because I'm thinking of, for example, having a plan where I can be buying these bonds every month, and then just like a plan where I say, okay, I put away this amount that was sent to Zambia all the time for these bonds and stuff. Do you reconcile those or bring them together? Do they become cumulative, or they remain separate?
Okay.
Suppose I give you 20,000 every month. I buy 20,000 of bonds this month, and next month 20, and then so. Will there be a time when you can combine them, or do they remain separate 20,000 bills, bonds? Or they're different contracts, so to speak. Do they remain as separate contracts? Yeah.
Okay, I just wanted to, let me see if I can, where's my presentation? I've lost my presentation. I wanted to share my, the PowerPoint. So yes, you can
consolidate. Can you consolidate them? That's what I'm saying.
Yes. So each bond has a unique serial, or should I say it's called an ISIN. Let me just look for that so that I just, yeah. You can see this?
Mm-hmm.
Yes.
Okay. So, for instance, this 2-year is a new issue, okay?
Yeah.
This one is a specific issue. So if you purchase 20,000 of this, on your CSD, there will be this serial, there will be this bond with 20,000. The next month, if you want to purchase another new issue, it will be a separate issue. So you have two, okay?
Okay.
But if you decide to purchase the benchmarks, for instance, the ones below, you see that there the maturity date is, it says 27th December. So it means it was issued in December. That was the first time it was issued. So if a person purchased it in December, and then they also purchased it last week, because last week it was put again on offer, because it's the same bond, it will not be separate. It will be added together to form one, because it's the same bond. So it just combines into one.
Okay.
So depending on what you want to do, if you want to have just one bond, for instance, and it's been offered for reissue, you can purchase this. Then but if you want them separate, you just look for new issues. Every time you're purchasing a new issue, it means what you're doing is you're spreading them. So they are separate bonds, you're spreading them by giving you different cash flows. But if you want this, yes.
Is
yeah,
that
if you want,
sorry, what I'm looking at is it, I don't know, I'm not a financial person. I don't know how this works out. To me, it looks like I look as a layman in financial matters. I was thinking, if I'm going to have a 20,000 bond and a 500,000, $500,000 bond, I was thinking that I'll get more money out of the 500,000. That's why I want to be combining these 20,000s. After 5 years, I'm going to have quite a big bond. That's the way I look at it from a layman point of view. Or is it okay to have them separate anyway? The cumulative return will be more or less the same as a big.
Yeah.
Is that the same? Like if you have a 500,000 bond, which
a lump sum,
and having the separate 20 or 50, 50, 50, 50. How do you look at it from that earnings point of view?
Well, in terms of absolute terms, it will just be almost the same.
Okay.
But the difference comes in on what your purpose is. Do you want to be receiving one lump sum at one go? Or do you want that lump sum to be spread? I think that's, yes.
Yeah.
So for instance, if I wanted just a lump sum, I know that for a benchmark, once it's issued, it will run for about 5 months. Then it collapses, another one is issued. So for the next 5 months, I can be buying it. If I go 5 years, I'll be just buying the same one. Then it will just be adding on and make cumulatively.
I'm talking about long-term
yes.
type of stuff, yeah.
Yes. So if, for instance, I'll say, okay, maybe in next year or some other, I want to every year when I go to Zambia, this period, I want to be getting a lump sum so that I do my projects, even if I'm building, so that it comes as a lump sum. I can do this. I can just be buying the same bond over and over the benchmark. But it could be, no, I just want to have these monthly payments. I want them to be coming in every month. Then I'll just be buying new issues every month. That way I'm spreading. But when I add them cumulatively, it just comes back to almost the same thing.
Okay.
So it really depends on how you want your cash flows. If you just want to be receiving your cash flow twice a year, then I would recommend that you just buy these benchmarks because they've been reopened. But if you want to be receiving these payments more often, you're better off buying new issues, because every time there's a new issue, it means your cash flow cycle has changed. You're adding on to a different cash flow cycle.
But the money that you receive is too small to do anything with it. I'm looking at now. That's the problem I'm looking at. If I'm gonna get a 1,000 kwacha, 2,000 kwacha, what do I do with it? 2,000. I want to get a big amount, but
in a lump sum. Yes. Yeah. So you can then go for the benchmarks.
Oh, I see.
And the good thing with the benchmarks is that the reason why they're called benchmarks is because these are bonds that their yield rates or their interest rates are used to price off. So for those in the financial world, like you derive the yield curve from these instruments. And because you want to derive the yield curve, you want to price off certain other assets of this curve. The reason we're reopening them is we were creating mass. We want the volumes to be huge. So when the volumes are huge on these instruments, you can easily buy or sell it in the secondary market, okay? You don't have to come to Bank of Zambia. If today I want to sell off my bond, it's quicker if it's a benchmark. Because for a new issue, I'll have maybe NAPSA holding all of it. And NAPSA will hold to maturity. So when you go to NAPSA, I want to buy this bond, say, no, we don't sell this bond. But for the benchmarks, because we're opening them so often, we've created the mass on them. There are a lot of people who are holding. So because there are a lot of people, there's one willing to sell and there's one willing to buy. So for instance, if for the benchmarks, you don't even have to wait for the Bank of Zambia to sell. You can just go and ask your bank, I'm looking for this particular bond. I seen 5067. If please, I'm looking for 20,000. The guy will look for it for you and find it and sell it to you. So you don't, it's the same bond, just like it will be issued next month. It's the same bond. It has the same parameters, and then, so you don't, for benchmarks, you don't really have to wait that monthly. Every time you have the money, you can just call your banker and say, I have this kind of money, I want 5067. That's a good thing with the benchmark, because a lot of people are holding it. But for a new issue, if you have, for instance, a big investor, maybe foreign investor or NAPSA or a bank, who went and got 300 million at one go and wiped out everyone out, priced off everyone, then what are the chances that you buy it from him? You might say, no, me, this one I'm holding. So you won't have, it's difficult to find that bond in the secondary market. But for the benchmarks, because they've been reopened all the time for like 5 months, I report, so you create a mass on it. Even in future, after 1 year, you can go in the market and look for this bond. Chances are you find it and you purchase it.
Interesting. Very eye-opening. That's very nice.
Yeah, this is very exciting.
Yeah,
very, very exciting. Mr. Kafunya, add your name in the chat. So as we come to the end here, maybe just some closing remarks. Finzi, thank you so much for doing this, man. This has been very exciting and very informative, and I personally have learned a lot. And from the questions, you can tell. Oh, Jason has a question. Please, Jason, go ahead. That's Mr. Jason Kazirimani, KPMG.
Hi, sorry, I joined very, very late, so I think I missed most of the presentation. But it looks like it was a good presentation. Just one quick question. Are you going to make this presentation available so that some of us latecomers and laggards can go through it afterwards? Thanks.
Finzi, let me answer that. Yeah, so we recorded this session, and what I'll do is I'm going to cut out the intros in the beginning and then the Q&A in the end, and give it to Finzi and let him decide which parts of it he wants to share. But mostly the PowerPoint was something that I'm sure can be just shared. So I'll clean it up. I'll give it to my engineer here to clean it up, and then we can do that. So Finzi, does that work?
Yeah, it's your recording, Prof.
Okay, yeah. So we'll get rid of the intros and then the Q&A, and just have the material, the core of it.
Okay.
Yeah, okay, great.
My classmate, Onward, what's up, man? Go ahead and ask your question. It's been a while. Mr. Lombam. Onward, you have your hand up.
maybe it's muted, I guess.
Muted, or just playing around with the things the buttons at the bottom. Yeah, Onward and I were together 5 years, same class.
Okay, am I heard now?
Yes, yes.
Okay, I wanted to, Finzi, you're talking of big amounts, and I get concerned, especially, I think I invited my son to listen with at the university. So maybe from the little money that he makes, he can also participate in the bonds. And from your presentation, you're just talking of big amounts, 100,000. I'm sure for a student who can make 30,000 and be able to put there, I think it will start generating something in his life. So I wanted to know if you're in your presentation, you have just been talking of big amounts. So I want to know to which limit, and from the presentation of the chart, I didn't see any small amount. Thank you.
All right. Thank you very much. So like I was mentioning, we have two windows in these auctions. What you're seeing there on the screen is the two windows. So the non-competitive runs between 1,000 kwacha and 499,000. So in short, the minimum amount that you can invest is 1,000 kwacha. So I think in terms of the charts that I was showing, those were the results, so like consolidated how much came through and how much on each tenor was invited. So in terms of retail investments, like I said, we cater for everyone. The minimum is 1,000 kwacha, 1,000 kwacha notes. That if your son is making 30,000, they are way qualified to participate in these instruments.
Okay. No, thank you very much. I get it now.
Awesome. Yeah, thank you, Onward. It's nice to hear your voice, man, after a while. So Finzi, as I was saying, we don't have any more raised hands or questions in the chat and everything. So I was just going to wrap up and say how appreciative we are of you stepping up and doing this. But since we have the BoZ floor right now, I was going to say that, you know, the comment that Mr. Mkandawire made is something that we should explore further, you know, how we are using, you know, 1,000 kwacha every weekend on this stuff. Because on the flip side of that, we can talk about compound interest. So here we have guys like Dupre, Lester, who's in retail banking. He could create a PowerPoint like this and talk to us about compound interest over time. So I think that's a topic we should talk about, you know, in the near future. But we'll be doing this every month. There've been some suggestions of different topics to cover. I've been in touch with Mawilo Musaka to talk about ZRA regulations, and he said he was going to come back to me. And would like to hear something about the ward development committees and how they're distributing the CDF. So Mr. Peten, you should talk about that, or Strike Soccer if we can bring him. Just the structure of what a WC is and how the money gets out on the CDF side of things. Because the CDF, if they invested it with Finzi, they'll probably make more money than, you know, 27 million kwacha, put it in BoZ, you make more money in 6 months than that you ever dreamed of. So,
but then you have no bridges.
Absolutely,
yeah,
but some people don't need bridges. That's the thing, you know. Yeah, I'll put my 27 million in Finzi's.
Doc, that's charging government for its money.
Exactly. Yeah. Well, Peter, getting from Peter to Pepo. Yeah, and then Simonza suggested some other names here that we shall pursue. But yeah, I think we've come to the end of our session. And gentlemen, just have a good time. It's Friday.